Hello, welcome to Financial Insider Weekly. I'm your host, Michael Gray, CPA. My guest is Bill Neville, and Bill is a certified IRA services professional, or CISP, and works for the Entrust Group, a self-directed IRA custodian. Bill joined the Entrust Group over 5 years ago as manager of operations for the company's franchise program. And when the program was discontinued, Bill became the manager for the compliance and internal audit departments. Bill kept Entrust's educational programs and internal processes in line with industry regulations, and he's currently the business development manager of Entrust's San Francisco Bay Area office, which is located in Oakland.
Correct.
Okay. Bill, thank you for joining me today.
Thanks for having me. Glad to be here.
Today we're going to be talking about alternative investments besides real estate for IRA and Roth accounts. And we previously discussed real estate. You can see that interview under past episodes at financialinsiderweekly.com. As we get started in this discussion, we want to alert you that we're talking about things in a very complex area. This is just a starting point for a bigger discussion. We want you to get qualified legal and tax advice. So, Bill, maybe you could tell us a little bit about how you got started in this area of working in the self-directed IRA business.
I started a little over 5 years ago, as you mentioned, with Entrust. But Entrust's been in business for 35 years, a little over 35 years. Hugh Broma is the owner of the company, and he started it in 1981. And, he filled a niche at the time. A lot of people were just investing in the stock market and continue to just invest in the stock market, but saw the opportunity for people to invest in what we call alternative assets, which is anything that's not a publicly traded stock, bond, mutual fund, and so created this business. And I just happened to, there was a position open with the company that felt like was a good fit for me, that I didn't necessarily have I didn't have very much knowledge about the self-directed IRA industry, but I liked the position itself and have come to become a really big fan of the industry. I think that not enough people know about self-directed IRAs, and as business development manager, it's my job to try and get more awareness of it out there to people.
Well, that's what we're doing today.
That's right.
Okay. Why would someone consider the alternative of a self-directed IRA with an independent trustee or custodian?
The driving reason for that would be that there's an investment out there that they want to make that they can't make with a traditional brokerage firm because it's not a publicly traded stock, bond, or mutual fund. So real estate we talked about previously is a good example. Private equity, precious metals, pretty much just about anything that you can think of as an investment. You're allowed to do it within your IRA. You just have to have a firm that allows for it, and that's where Entrust comes in. So people find an investment they want to make, and a lot of times they go to their brokerage firm, they go to their bank and say, hey, I've got this investment I'd like to make. And the firm says, well, we won't hold that. We don't hold that investment. You have to go to a self-directed IRA company. And that's a lot of times how they find themselves falling into it.
Okay. How is your service different from a self-directed plan at a bank or a brokerage company?
Well, the bank or brokerage firm, by and large, if they're saying, it's self-directed, it means that they're allowing the account holder to purchase their own stocks and mutual funds, right? But they're still invested in stocks. They're still invested in the stock market or the bond market. Whereas a true self-directed IRA, the definition of it means that you can invest in alternative investment. You can invest outside that limited market. There are the brokerage firms, from what I understand, do tend to have small departments that they allow for true alternative investments. For some of their clients, it tends to be the higher net worth clients that they have. Whereas in our industry, the self-directed IRA industry, Entrust, we will allow any investor who has an investment that they want to make that's not prohibited, we'll open the account and allow for them to make that investment.
Okay. What types of retirement plans do you handle?
All IRAs, traditional IRA, Roth IRA, SEPs, and Simples. If you're a business owner, for a SEP and a Simple. Solo 401ks for business owners, individual business owners, their spouse and partners. And then health savings account and educational savings account, we have those plans, can all be self-directed. So really any retirement account plus ESAs and HSAs.
Right. So, but you wouldn't tend to handle, we said the solo 401k is
Correct.
what you focus on. So if
Right.
you have a larger 401k for a business that has several employees, usually wouldn't handle.
Yeah, if there's
something like that.
employees, then we won't hold the plan. It's for solo 401ks
Okay.
only.
Okay. So what kind of unusual investments besides real estate do you see being held in IRAs and Roth accounts?
Well, for alternative investments, I mean, the biggest investments that people have, real estate is number one in self-directed IRAs, but precious metals and private placements, private equity are the next two biggest. Besides that, there's things like life settlement investments. Really anything that you can think of. It's easier to talk about what you're not allowed to invest in than what you are allowed to invest in. The only things you're not allowed to invest in with your IRA are collectibles, life insurance, and S corporations.
Mm-hmm.
So outside of that, if you can think of it as investment, your IRA is allowed to make it. But like I said, private placements and precious metals, aside from real estate, tend to be the biggest holdings that we see. Now with the Jobs Act, we're seeing even more private placements. People are investing through crowdfunding portals, so that's bringing even more investments into private equity.
Okay. Another thing, I don't see it on my material here, but that's okay, is private mortgages. Although I guess you could say it's related to real estate, but I think that actually they're sort of an ideal investment because you can participate in appreciation for a property, but it can still be considered to be interest.
Right.
And so interest and dividends are the least problematic types of
Right.
income for these
passive-
types of accounts.
For passive income, yeah.
Yeah.
I mean, a lot of people, essentially they're using their IRA as the bank, right? So the IRA is going to loan money, and then the loan gets paid back to the IRA. Sometimes people will purchase underperforming notes, right? There's
Yeah.
the ability to purchase notes out there where the IRA buys the note. Tax liens is another. I mean, those sort of fall, from our standpoint, those fall under real estate because the collateral associated with
Yeah.
them is real estate. As opposed to just investing in the property itself. There are real estate type investments that aren't holding real estate. And trust deeds and tax liens are a couple of those investments. So, yeah.
But, I mean, when you see what's going on as far as interest that's being offered in a bank, the returns are abysmal.
Right.
And meanwhile, a lot of people aren't comfortable with investing in the stock market because it can go down as well as going up.
Correct.
And they're just not comfortable with the gyrations of the market. So there are alternative investments that you can make that are sort of interest-based, and you can get better returns.
Right.
Anyway, and you can hold it in these accounts.
And potentially they make more sense. I'm a self-directed IRA holder, right? I
Uh-huh.
have a couple of trust deed investments, and I've got a rental property. And part of what got me out of investing in the stock market is I don't really get it, right? It doesn't, when it moves and what direction it moves doesn't necessarily make a lot of sense to me. Whereas something like having a loan where I'm being paid interest, that's pretty straightforward. I understand that. And it's supported by a property, right? It's collateral of a property. If they default on the note, I take the property.
Mm-hmm.
So, I mean, I'm basically acting like the bank, but I'm getting pretty good interest on it.
Right. Yeah. So these are reasons why people could favor this. We have other programs where we talk about, investing in the stock market, but it's not for everybody. They just
Right.
Temperamentally they may not be able to deal with it.
Right.
So maybe you could talk about, some of the what are types of investments we talked about this to some degree as far as the notes. What are other things that are really well suited, you think, to hold in an IRA or a Roth?
Well, I think that long-term investments, for one thing, right? I think that that within a retirement account, you should look at a longer term, right? And then anything that I think that's bringing in passive income, and that's where you maybe a rental property, right? As an example, and we already did real estate, but that's, I think, the ideal example of something that's well suited for investment within an IRA, because it provides rental income and potential appreciation. So yeah, and I think anything that provides passive income is a good investment to be held within an IRA.
What about owning a business through an IRA or a Roth or whatever?
Yeah, there's some rules around investing in a business depending upon your personal involvement in that business, right? It's one thing to be an investor in a private equity, right? To bring the money into it to a business, but you don't have any personal management of it. You don't sit on the board of directors or anything like that. It gets a little more complicated if you want to invest in a business that you have personal, like you're an executive, right, or you sit on the board. There's some rules, some pretty restrictive rules around what you're allowed to do with that. So, for example, if you work for a company, if you work with a company, and you want your IRA to invest in the company, and you also have personal ownership in that company, your personal ownership has to be less than 10% of the total ownership of that company. So that's just one example.
Right. And so we're sort of getting into the area of prohibited transactions again. And
correct.
So the problem is that these prohibited transaction rules were really designed for like corporate retirement accounts, and so they were trying to protect the employees. And the problem is that in this case, it can create an environment that makes it hard for you to operate and so on.
Yeah.
Like I said, as the manager or whatever for this business. And for example, the IRS has ruled in one case that an individual couldn't pull a salary out of a business that they owned through a retirement account. And that was a prohibited transaction. Boom.
If it's 100%, yeah. If you're a 100% owner in particular, so you can create an LLC, like a single member LLC, where your IRA is the owner of the LLC, and you can manage that LLC. You can't receive a salary for it. So when we see that a lot is when people are using it as a vehicle to then turn around and make investments through the use of that LLC. I think that you can invest in a business that you receive a salary, again, depending upon your role in the company, and as long as your IRA's ownership or your personal ownership and your IRA's ownership is below a certain dollar amount, or a certain percentage, not necessarily dollar amount, but percentage ownership of that business.
So anyway, what I wanted to point out to people is that that these are sensitive, and I guess we'll mention again what the consequence is. What happens if you do have a prohibited transaction?
If you have a prohibited transaction, your IRA gets distributed to you. If it's determined that your IRA has committed a prohibited transaction, then your entire IRA becomes
taxable income.
Becomes a taxable event, assuming that it's held within a traditional IRA. Then it becomes a taxable event.
Right.
The whole entire thing.
Right. So.
And it comes distributed at the point that you were committed the prohibited transaction. So if you did the prohibited transaction 5 years earlier, and then it gets determined 5 years later, they actually go back 5 years for when they process that distribution to you.
It's very nasty.
Yeah.
One thing too. So it tends to be better to hold a business as C corporation stock. So in other words, the corporation is not a pass-through. It's not an S corporation. The corporation pays its own income taxes.
Right.
And so that insulates the activity of the corporation other than dividends. And dividends are they are permitted income.
Right.
An ideal type of income for these accounts.
Right.
So the corporation can distribute dividends, but you wouldn't want to have a pass-through. Now, if you had a partnership or an LLC, then there may be an issue related to unrelated business taxable income.
Right.
And so unrelated business taxable income, again, we've mentioned in another program, but it's subject to income tax for the IRA or any tax-exempt entity that owns it.
Right.
And it's taxed at actually accelerated rates. So I think when you get over about $12,000 of income, you're at the maximum tax rates for federal tax.
Right.
But you do get a small exemption, about $1,000.
Yeah, you have to essentially be running a business within your IRA for it to be subject to unrelated business income tax. Your IRA is allowed to invest in a business. It just can't be running a business within the retirement account.
But income, you see, income passes through from a partnership or an LLC. That's what I'm saying. So if you invest in a business that is doing business as a partnership, and the IRA invests in that business, then the income that passes through from the partnership, I believe, is subject to unrelated business taxable income tax. Okay. Okay. Can stock acquired using an employee stock option be held in an IRA or a Roth? This is a question that I get from time to time.
In a self-directed IRA?
Yeah.
So if you've got that, so no. The answer to that is no in an IRA, but potentially yes to a 401k, to a solo 401k. You can contribute stock into a 401k as a contribution to make as an annual contribution.
Well, yeah, so only cash can be contributed to an IRA or a Roth.
Right.
You have to be careful about employee stock options in general. So usually, and only the employee can own an employee stock option. Right. And so it's not a matter that, this is the question I get, is there a way I can shift this income into my retirement account? And the only way you can do it is through a regular contribution to the account. So
to a 401k.
Yeah, to a 401k.
Right.
Okay, maybe you can share with some examples of some successes that you've seen of some of your customers or clients that have invested in alternative investments using an IRA or a Roth.
That's a good question. I tend to, once the account is opened, I'm not really necessarily involved in seeing all the transactions that they make afterwards.
Maybe you can talk about a couple of things that were just interesting things that people did.
One of the more interesting investments that we as a company held was when somebody invested in cattle. They bought cattle using their IRA, and then they, housed them, fed them, got them to the point where they become something that they could then sell to. I don't even know who they sold them to. Meat some some company who was going to turn it into something that we eat. And they did that all within the IRA. So because the IRA made the investment, the IRA was responsible for all the expenses associated with it, right? So to house them and feed them and do all that stuff had to occur within the IRA. There was another one that I know we've talked, that I've heard some stories about that I haven't seen specifically with our company, was someone invested in, they bought some kind of product that they owned it for the length of time that it took to ship it from like Asia or somewhere like that to the United States, right? So it was held on like a cargo boat. And so it was bought at the one port and sold at the other port. And it was this short-term investment, and it's like, I don't know, olive oil or something like that. And they knew they had been in that industry in their career, and they knew people, and they were able to make this investment within their IRA. It was a completely unique investment, and you'd have to have like that specialized knowledge to have been in the industry and know people and be able to do that. But they held that within their IRA for the period of time that it took to basically float across the ocean and get sold at the other port.
Right. So sometimes we talk about this unrelated business tax, but even with the tax, if the transaction is profitable enough.
Right.
So what settles out, again, people may feel that that's better than the alternative.
Sure.
And again, I think that you said before, they understand what the heck they're doing, and rather than get involved in something that they don't understand what they're doing, and maybe getting a smaller return, or maybe even losing their shirt, they may be much more comfortable doing something like you were just describing.
Yeah, if they can grow their retirement account. You'd asked me about success story when he was running for president. I mean, part of when Mitt Romney had to release his taxes is that showed some pretty tremendous returns that he held within a self-directed IRA. So he's probably one of the biggest success stories of how somebody could really grow their retirement account within a self-directed IRA.
Yeah, I believe he was involved with Bain Capital, and so that maybe there was an opportunity, again, private investment that he found out about by being involved with Bain, and was able to invest using his IRA.
That's right.
So
and he did it in a Roth.
And isn't that great? So yeah. So again, I wanted to bring up this thing about annual valuation reporting for IRA and Roth accounts.
Right.
And so maybe we should talk about that for a few minutes.
Yeah, that's one of the one of the unique things about it with a self-directed IRA and alternative investment, because these investments aren't held in like an exchange that you can easily get the pricing for. It's incumbent upon the client to provide us a fair market valuation of their asset that's held in the account. So with these alternative investments, with something like private equity, right, which is a pretty popular investment, we send a notification to our clients on an annual basis and say, hey, we need an updated fair market value of the asset held in your account. And we report that to the IRS, right? So that's the reason why we ask for it, because there's a Form 5498 that we have to send to the IRS every year that updates one of the things that provides is the fair market value of the account. So for private equity, for example, the client would need to, we have a form called a fair market valuation form. They would need to send it to that private equity company and get a valuation. A lot of times they provide a K1, so they can attach the K1, and that shows the value that their IRA holds in that investment. But it does need to be updated, and particularly when somebody has reached the age of 70 and a half, where they're subject to require minimum distributions. It's even more vital to be able to get that. But it's incumbent upon the client to provide it. That's the only way we can get it, right? We have what, 19,000 accounts. I mean, we have thousands and thousands of assets. We can't value those. We have to have the client provide that to us.
Right. So there is an annual report that has to be issued by the custodian. It's Form 5498, and the fair market value is on that report. Once you reach age 70 and a half, it's a critical number, because the participant, the owner of the account, figures their annual required distribution based on that value divided by their life expectancy that they recompute usually each year. And it's based on an IRS table. Anyway, if you don't distribute enough, there are huge penalties that can apply. So so it is a concern, especially when you get to that age, because of that exposure to penalty. And sometimes determining the value can be an expensive process to really get a good one. Now, for some companies, they have to get a evaluation study done annually in order to issue stock options. I think it's called 409A is the section of the Internal Revenue Code that requires them to get this information for any exercise of an option or any option that's granted during the year. So that may be a source that they can borrow a value. So anyway, that's something to think about and to be aware of. So these are not simple little things. Okay. So we're really to the last couple of minutes here. So maybe you'd like to share some final thoughts related to this area of alternative investments and these accounts.
People, when I talk to people about these, and I will get the question of why should I do a self-directed IRA? And I mentioned the last when we talked about real estate is that if someone finds an investment that they make that they think can grow their retirement account better than where it's currently invested, wherever it happens to be currently invested, then that's the reason to do a self-directed IRA. There's a lot of money in retirement accounts. Latest figures are like $8 trillion are in retirement accounts, and only 3% of that is in self-directed, is in alternative investments. And I think numbers state there's around 20% of it that's just held in cash because people,
when they're afraid,
don't necessarily want to put it in the stock market. Yeah, and they don't necessarily know where there's other opportunities to invest in it. But they're self-directed. It's incumbent upon the client to do his own due diligence, do the research. The administrator, we're not helping with that process. We're there just to hold the asset and make it legal for them to do it. So if anybody's thinking about doing these types of investments, educate yourself, talk to, have professionals, have people in your life to provide good guidance, and make a well thought out decision before making that investment.
Bill, thanks for joining me
today. Thank you. Thanks for having me.
Pleasure having you as a guest. Folks, hope we've given you some things to think about, and we'll see you next time on Financial Insider Weekly.